Hi, good afternoon. Ross McInnes from Australian Investment Research Services. Thanks for joining us. As has been our core view this week, we were looking for the markets to stabilise after they capitulated last week, and especially last Friday morning when the S&P 200 Australian index got down to 4175, which represented a 15.5% fall from the April highs at 5,000. This week, though, sentiment remains brittle and the markets continue to trade as they did sort of March quarter last year, where they bounced from news story to news story, given the uncertainties that people think there could be a second recession in Europe this year. In relation to that, last night we saw China, a story quoted about China in the Financial Times that suggested they may reallocate out of Eurodollar bonds, although there wasn't much evidence of this outside of that story. But this afternoon, the People's Bank of China actually decided to release their own press release that officially disregarded this story and rebuffed it, and said there was no change in their policy towards having a diversified portfolio of holdings. Noting again that their FX reserves are around $2.5 trillion US, which has accumulated surpluses over the last 10 years, and a fair chunk of that, about $800 billion US, is in euro bonds. On the back of this news, and also the fact that the resources tax may be changed to favour the miners rather than its current setup, we've seen a rally on the S&P 200 today, off 4,300, closed up at 43.75. BHP was up 4% at $38, and Rio up 4% as well. So again, over the last 6 weeks, we've had 9 or 10 variables that have been negative for the market, and today we had a couple that have come around. We're still not sure whether Rudd will actually change the tax. They seem pretty determined to push it through, but there is some political damage apparently accumulating against the government on this move. In reflection of this, the Australian dollar also rallied up, and this afternoon sitting just above that key level we've been talking about all week at 83.50. We see some more stop buying, sort of people getting sucked in to buy the market because they've got short, more likely probably around 85.90 area, 83, 85.90. But again, the focus tonight is on whether the US S&P 500 index can actually close back at above 1,080 after a very volatile week in which it traded down the 6-month lows on Tuesday at 1,040. If we can see that happen above 1,080, then we may see some more confidence come back into the markets, and this would affect interest rates across the world, including Australia, where we've seen a major swing in sentiment over the last 10 days, with the Australian interest rate market looking for actually an easing by December quarter. This looks fairly unlikely, assuming that Europe doesn't implode in the next month or so. But still really looking for proof either way of whether Europe has been heavily affected by the month of shocks. Eurodollar's travelling back up to 123.50 at the moment, and it needs to close above 124.50 to prove that it's sort of out of trouble at the moment. So thanks for joining us. The themes are still there. Market on a medium-term valuation looks okay, but we've still got short-term volatility, and the market remains very fickle and moving from news story to news story. So thanks a lot, and we'll speak tomorrow morning.